Hello friends, how are you? Welcome to the Elliott Way VN. So let's start with the DXY. So overall market going towards the bearish side, like market completed its correction at this point as a wave 4, and market behave like wave 1, wave 2, and now the brown wave 1 is in play. Or that's possible here, we can move this wave 1 from this point to another point. So we count like we 1, 2, 3, 4, and 5. The main thing is that market rejecting from this large number 100. Market move from one point to another point, from one large number to another large number, and between these two large number, market move from medium levels, minor levels, and sub levels. So market give us this rejection from 100. Market move from one point to another point, like if we go, if we check, this is the large number 1 and this is large number 2. So when market go from 2 to 1 or 1 to 2, market go within the large number, market have the minor levels, sub levels, minor group 1, minor group 2, and medium level. So when market move like, market first go group 1, 1.1, 2, and 3 belongs to group 1. Then market give us the arrival, a reaction, first high above level A, B, and C. Then market go towards the 1.5 and again give us the classic trading level pattern, arrival, reaction, first high above level A, B, and C. Then again market go towards this point, give us the pattern, arrival, reaction, first low below level A, B, and C. Then go towards this 2. So market move from one point to another point within this two large number. Market move from 1.1 to 3, and then again market behave fractal at this point. Like if we zoom this number, then market again move from 1 to 1.5, 1.1, arrival, reaction, first high above level A, B, and C. Then go towards the 1.2, arrival, reaction, first high above level A, B, and C. Then market move from one point to another point, and again from 1 to 1.1, the micro levels within this. So market move from one point to another point. We can go with the swing trade in daily trade and 4 hour, 1 hour, 15-minute time frame. So when we follow this classic trading level pattern, like pattern number 1, market arrived, react, give us the first high A, B, and C. Then we will go with the bullish side with the new impulsive move, and if we are in the bearish side, we need to wait for this pattern like this. So in DXY, market moving around 100, and this 100 act as a tested resistance with the classic trading level pattern. So how we go in DXY, how we go in DXY, that's also possible. This whole move like WXY belongs to W, or A, B, and C, like A, B, and then market will go up. But when we follow the number within this 100 to 90, the minus level and then micro levels we follow, then our reward ratio will increase. So let's check in 1 hour time frame directly, because we are covering the 5 to 6 pair in half hour. So let's go directly in. So if we go with this last big leg like WXY as a wave 4, so now market may completed its correction, now ready to go towards the bearish side, and market behaving in 100, the large number. So if market give us the classic trading level pattern at this point, like market arrived cross this 100, give us the pattern A, B and C. Then again market give us the correction like this. Then we will go below this point. So if we check the bearish pattern, market give us the arrival reaction first low below level. Or if we go with the pattern number 3, sometime market not stop at the level like 100, directly give us the low. Market not stop at 100, give us the low. Then A, B and C we will go with the new impulsive move like this situation now. Now market not stop at 100, directly give us the low, and now market we need to wait for this correction and new impulsive move like this. If we check this 100 point here, market directly give us the low. Now we need to wait for the, after this low we need to wait for the correction and new impulsive move. If market give us the correction like this wave, okay, wave A, B and C, and again market give us the low below this low, then we will go with the correction in 15-minute time frame, 30-minute time frame. This pattern you can easily see in the lower time frame. So we need to wait for this pattern, classic trading level pattern, then we will go towards the bearish side. Otherwise if we not follow this pattern or go directly with the bearish side, that's possible here if we follow this move or enter with the little correction for the bearish side. That's possible market go directly like this and then go down. Then we will count like A, B, C, W, X and Y. Or this move we count leading diagonal and this move we count ending diagonal. So we need to wait for the pattern like this. We count this move like wave A, B and C as a W, or 1, 2, 3, 4, 5 A, B and little C, or market little go towards the 19 and then go up. So we need to wait for the classic trading level pattern as of now. So we count like wave 1, wave 2 and then wave 3. So let's go towards the Euro USD. In Euro USD, market behaving like wave 1, wave 2, 3, 4 and 5. So wave 4 may completed here or wave 4 go little more down, like we count this move as a WX and then A, B and C as a this wave 4, or we count this move like wave 1 and wave 2. We shift this wave 1 at this point. So when we go towards the trade setup, we need to wait for the classic trading level pattern. If market give us the pattern at this point at 1.65, the medium level or the lower end of group 2, 65, 72 and 80 belongs to group 2. So if market give us the pattern, let's check the in 1 hour time frame. We count this correction last leg, big leg like WX, A, B and C. So now we are looking for this wave 3 and how we go with this wave 3. So market rejected from 1.16. This is also a round number, large number, minor number. Market arrival, a reaction first high above level A, B and C. Then we will go with the bullish side with this wave B. Or let's check this, market not touch this 1.6 this leg. So we can count like arrival, a reaction like this, arrival, a reaction first high above level A, B and C. Then we will go towards the next point. Next point 1.165, then 172, then 80. Step by step we go towards the, if we are looking for the intraday setup, we are looking for the first step 165 and then 172, because when we go in fractal with this pattern and with this number within this 65, 510, 520, 530, so for intraday setup we need to wait for this pattern and then we will go towards the 165. At 165 in 15 time minute frame, market again give us the pattern like arrival, a reaction, first high A, B, C, and then go towards the 172 and then 180. So as of now, for this situation, some people and some counts, if we follow this some count, like we think we go directly with this, after this we go with this at this wave B. But that's possible, this is wave A, B, and C, then market go towards the bearish side. But when we follow this pattern and we shift our stop below this classic trading level pattern, first we shift start with this low. If market cross this point, then we will shift at this point. When market give us the 165 at classic trading level at this point, then will we go with this low. Then again, step by step we will follow this classic trading level pattern. So Euro USD now started to go towards the bullish side. So let's directly go towards the pound. In pound market, this correction go little below, and we count this correction like wave 1 and wave 2, wave 1, 2, 3, 4, and 5, because this is a little deep correction compared to DXY and Euro USD. So we count like wave A, wave B, and 1, 2, 3, 4, and 5, the last leg. If we remove this wave A, B, and C, we count like wave 1, wave 2, wave 3, wave 4, and wave 5. Wave A, B, or WXY we also count differently. But when market give us the classic trading level pattern at this point, then we will decide to go towards the bearish side or bullish side. So in British pound, that's possible market give us the one leg more. But the main thing is that in which we are looking for the large number, the group 1, 1.3. So let's check the in 1 hour time frame. So if we count like this, wave A, wave B, and wave C. As a black wave. Okay. So here that's possible. Market completed its correction and ready to go towards the bullish side. Or we count like wave 1, 2, 3, 4, and 5. Market may go like this and then go down. So how we go with the trading setup? How we know that the correction completed or not? So let's check. If we count like wave 1, wave 2, 3, 4, and 5, wave A, B, and C. So this wave 1, wave 2, and then wave 3. So here if we check the number, market arrived at this point, not touch the 1.32, arrival, a reaction. This reaction may go little down, that's possible. We need to wait for first high above 1.32. Then A, B, C, and then we will go towards the bullish side. When we go with the bullish side, our next target area is 1.33. From 1.32 to market will go towards the 1.33. Between these 32 and 33, the micro levels, minor levels and micro levels, like 32, 100, 32, 200, 300, like this. So we need to wait for the classic trading level pattern like arrival, reaction, first high above level A, B and C. So now we are looking for the this correction and first high. If market here give us the first high and correction, then we will think about and then we will go towards the bullish side at this point like this. So in GBP, this pattern will confirm we are in this next move. This move can go like in the as a wave C, but we will go our target around 1.33. So this is the case in GBP USD. When market give us this pattern, then we will go towards this next move. Otherwise, that's possible. We count like wave A, wave B, wave C, or WXY, and market can directly go towards the bearish side. That's also possible. So in Canadian dollar CAD, let's start with the daily time frame. Market completed its correction. First market completed its wave 1. Now market make completed its correction. How we decide that market completed its correction or not? So first we need to see the large number, the round number. So here the next number is the 1.4, the minor number. The minor number 1.4. So if market give us the classic trading level pattern at this area like arrival, reaction, first low below level A, B and C, then we will go towards the next point 136.5 for the swing trade in daily time frame. This pattern work in every time frame. Okay, so let's check in the 1 hour time frame this leg, because we are short in time. We cover 5 to 6 pair in 30 to 35 minutes. So let's go and see this last move. So at this point we are looking for the next move as a wave 3, or that's possible. Here market give us the low, then give us the correction, first low A, B, C, then we will go at this point. We need to wait for this pattern, classic trading level pattern. We can count this wave 1 like this, wave 1, 2, 3, 4 and 5, like ending diagonal and like impulsive move, little impulsive move within 15-minute time frame. So we need to wait for the pattern below 1.4. Market arrived, react first low below level. After this low, market again give us this correction. Then we will go at this point with the bearish side. Directly if we go, that's possible. Market behave like this wave A, B and C or WXY, or market give us the little leg like wave A, B, C and then go up. So when market give us the classic trading level pattern, then market our next targeted area 1.8 in the day trade, or in the intraday setup we go towards the 1.39. So this is the way to go towards the bearish side. We need to wait for this pattern because the 1.4 will react. If we check and see, market will react and reject it in every, like 1.38, the group 2 market go arrival, reaction, first high above level A, B and C, then market go towards the next point above 1.39, then 1.39 act as a tested support with the classic trading level pattern in one above 1.95. Again market give us this pattern above 1.4 and then 1.465 or 72. So market move from one number to another number, one number to another number, one number to another number. So when we follow this pattern with the Elliott wave, our reward ratio will increase. So let's go towards the Japanese yen and see how market will behave in this pair. So in Japanese yen JPY, we count this move in different ways. Like this is wave A, this whole structure may go towards this wave A, and this may we count wave B and wave C as a flat pattern. Market will go like A, B, C, and then go towards this wave C. That's also possible. Or A, B, C, D, E, like we are counting at this point. So let's check this leg. Okay, first we discuss WX and Y, either WX and Y. So market behave in double zigzag pattern in JPY. Let's check this point in 1 hour time frame. So market go like wave A, wave B, and now market go towards this wave C. So why we are looking for the bullish side as of now? Otherwise, the DXY go towards the bearish side. USD CAD also go towards the bearish side. So because the reason is that the 1.50, the medium number, market give us the classic trading level pattern. At this point market go above this, give us this reaction, first high above level A, B and C, then market go towards the next target area 1.55. So if market give us the classic trading level pattern at the 1.55 again, then we will go towards the next point 160. Step by step. Step by step means that following the minor levels and micro levels. So if market arrive, give us the rejection, first high above level A, B and C, then market go towards the next point 156.5, 17 and then 160. So if market give us this pattern, then we will count this move wave C like wave 1, wave 2, 3, 4 and 5. Fractals of this subwave 3. But if we are looking for the bearish side, then we need to wait for at this point 153, the group 1 market arrive at around 153, give us the arrival reaction, first low below level below 153 A, B and C, then we will go towards the bearish side. Otherwise we are not looking for the bearish setup in JPY. If market give us the pattern above 155, like now market ready to touch 1.50 then market may give us the classic trading level pattern for the bullish side. So for the bearish side we are not looking for now, because we need to wait for 1.53, the group 1. When group 1 act as a tested resistance, then market go towards the 150, the next number, the medium level. Then we need to wait for the classic trading level pattern below 150, then we will go towards the next point step by step, as we discussed in our first pair, the pattern and the trading numbers levels. So let's go directly the CHF, the Swiss. I think, okay. So at this point market completed its wave B from wave A to wave B, and now market playing in wave C, like 1 2 wave 3 4 5, 1 2 3 4 and 5. Here this wave 4 completed or not, we will check in 1 hour time frame with the patterns. So here the main thing is that in which I am looking for the group 2, the end of group 2 0.8. If the 0 point act as a tested resistance with the classic trading level pattern, then we will go toward the next point. So WXY, if we see, because we are not looking towards the 4 hour time frame, so WXY, and now market ready to go towards the bearish side. So let's check in 1 hour time frame directly. So market completed its correction as WXY, or that's also possible here. Market WXY X A B A C X and then go up. That's also possible. But if we want to go towards the bearish side, we need to wait for the classic trading level pattern at this point. If you see and check, as of now 0.8 act as a resistance or support. If market, if this 0.8 act as a support, then market go towards the bullish side. So if we count like this, wave 1, wave 2, 3, 4 and 5, then market give us, this is we call like arrival, reaction. We need to wait for first low below level A, B and C. Then we will go towards the next point 172 in long term trade or day trade, and the next targeted area our 17850, step by step. So if we want to go towards the bearish side, we need to wait for the pattern at this point where 1 2 3 4 5 of wave 1. Then market give us the correction like A, B and C. Then again give us the first low below level like this. Market arrive, react, then give us the first low. For this first low tell us that market break this large number, and now market ready to go towards the bearish side. If market not cross this high, this last leg, and give us correction, again we will go confidently with the next move. So arrival, reaction, first low below level A, B and C, and again market give us the correction. Within this impulsive move we will shift our entry from this point to this point. First we shift our entry from this wave B to this wave new low, entry 1, then we shift our entry within this wave B. So like that, after this move market give us this pattern A, B and C. We will think that we will go below with wave B. But if we follow the classic trading level pattern and wait for this new low and A, B and C, then we will refine our entry with this wave B. First we go with this move and then this point. And the main thing is that how we shift our stop. When we enter, that's possible we will go with this stop, or if we enter after this pattern, then we will start with this our stop set here, then we will shift our stop at this point. Again market give us the classic trading level pattern around 79 0.79, we will shift with the classic trading level pattern if we go long. If we think for the intraday setup, we will go from 0.8 to 0.79 and then 78, then 77. This is the way to go towards the intraday setup or any setup with the classic trading level pattern. If we not follow the classic trading level pattern, we will confuse with the so many counts. We count like A, B, and C. We count like way 1, 2, 1, 2, then go up or WXY. When we combine the Elliott wave count with the trading levels and classic trading level pattern, then our reward ratio will increase. So this is for now, and like, share, and subscribe. And if you want to me to analyze other pairs, so comment me and like, share, and subscribe. Thanks.